Well, Cathie Wood's come out with another prediction. She's saying that the bear market is basically coming to an end and that growth stocks are now going to outperform and explode. She makes endless predictions, and when she does, as a guru, the media picks it up all over the place. And the reason why they do that is because she is so popular that there's a lot of people that want to hear what she has to say. Uh, but what I want to talk about is how are her funds actually doing? We've had a nice stock market rally over the past 30 days, but despite that rally, her funds still are not doing that great. They really haven't benefited as much as one might think from the stock market move. And there's lessons for us to draw from that as investors or stock market traders. Um, Here's the thing, just because someone's got a big name doesn't mean one should do what they're saying or not do what they're saying when it comes to the stock market. And this is just today, all the things, all the stories about her. And a lot of them are about her predictions for this Roku stock. Um, on July the 18th, she said it would go up 700%. She was selling some Tesla to buy Roku. Um, Again, I guess she sees that as part of her claim that the bear market's over now. Her online stocks are going to go crazy. But what happened last week is Roku crashed. On Friday, it crashed 23%. And the problem with that is that stock makes up one of her top holdings. This is a list of her top holdings. Number one is Tesla, makes up 9% of the fund. Zoom, 8% of the fund. Roku, 7.8%. So when about 8% of her holdings, her investing money in her main fund falls 22%, that has a big negative effect. But a lot of her stocks are not doing well this year at all. Um, but what I want to show you is um, a lesson to learn from this. I'm not here. She's got some good ideas and some bad ideas. I'm not trying to just attack her. That's not the point. Um, I want you to learn from what people are doing, their wins and their losses and their mistakes. And the biggest problem I see with what she's been doing the past year and a half is okay, here's a chart of Roku. And the indicator on the bottom of the chart is very important. It's a relative strength indicator. It's taking the price of Roku, dividing it by the S&P 500. It's a ratio. And what's important is when that ratio goes up, it means that the stock that you're comparing to the S&P 500 is outperforming. The price is going up faster than that of the S&P 500, or the S&P 500 is falling, it's falling less or even going up. When this indicator is going down, it means the stock is underperforming the S&P 500. If you want to beat the market, you want to own stocks and funds that are beating the market. If you do the opposite, you are a stock market loser. So if you're a fund manager who is holding stocks, that all your holdings are underperforming the market, guess what? Your fund is going to underperform the market. You're not going to be able to do that forever because ultimately people will take money out of your fund and in other funds, and it's just not a good situation. In fact, most funds, mutual funds and ETFs that are managed historically, the majority of them actually do underperform the market and they come and go. But her fund has been underperforming the market now for quite a long time, as you can see, for at least this chart goes back 12 months. Her fund's down 53% year to date. When the S&P 500 is not down half that much. And it's not just year to date, which is from January, but the past 12 months, it's down a whopping 62%. That's devastating for someone who had all their money invested in this fund. And despite that performance of the fund, it still remains one of the most widely owned funds or positions that people have. This is Robinhood, a small Robinhood account. I just log in to see this, but this is the rank of the most 100 widely owned stocks or funds ranked by the number of people who own them. Tesla's on the list as the top fund, but you scroll down and somewhere on here, the ARK fund is past it. It's on this list. Here it is. ARK Innovation right there. Still remains one of the most widely owned things that people own, despite that. And again, we're having a market rally, and this relative strength ratio has not improved. It has not gone into an uptrend. It's just going sideways. So the fund has not really benefited from the market rally, and that's bad. And the reality is, look at that with Square. It's been a laggard all year. Zoom has been a laggard all year. Tesla, has had its ups and downs, but it's improved in the past 30 days. But it's not been a great stock this year. So that's what her fund is full. I mean, this is one of the better performing positions in her fund. One of the articles said she was selling Coinbase to buy Roku. Well, Coinbase has been a complete debacle this year. And two takeaways I want you to have from this is, again, if you want to beat the market, buy things, hold things, beating the market. It's as simple as this. For example, a stock I've been real bullish on for the past couple of years, Exxon. Exxon is up. When the ARK fund is down this year, Exxon is up. Exxon is one of the best performing stocks in the S&P 500 and the Dow. I think it might be the best performing stock, in fact, in the Dow. Chevron, another one. Energy stocks have been incredible this year. Energy stocks, they make real money. They pay dividends. They're not losing money like so many of the more speculative plays that were red hot in 2020 do. They still lose money. So that's what to think about. And that's why I try to do, in stocks I buy and talk about are ones outperforming the market, making money, and do videos about that. And then conversely, at times I will analyze my portfolio, my holdings, and if I have things that are now lagging the market, not just over a day or a week, but over a couple of months, that trend has changed, I will use rallies like we're in now to get out of those kind of stocks so I can free up some money and to shift into better things when I think the time's right. And I think, market rallies like we're having now, that's the time to be doing things like that. Hopefully the rally will continue, but it's still something to think about. Use the rallies to lighten up and then buy on dips. That's how, you do stuff in the markets. So interesting time that we're in. If you like this video, hit the like button. And if you're new to my videos and you want to see what I have to say in the next one, click the subscribe button and then click the bell next to it, and YouTube will send you an alert as soon as the next video is up. And I'll be talking with you later.